So yesterday in the stock market, the financials and private equity sectors sold off dramatically, and many of you have been asking me what is going on here and why are these stocks selling off so much. For example, Apollo was down 8.6%, KKR down 6.6%, Bank of America down 5%, JP Morgan was down 3% at one point, Brookfield Corporation was down 3.5%, and even Brookfield Asset Management was down 4% yesterday. Now, this sell-off is happening because it's been reported that there has been some weakness in specific private equity investment books, and now investors and the market as a whole is starting to worry that this is an early sign of contagion, or in other words, that losses in these private equity books could start skyrocketing. For example, an analyst at UBS is now saying that private equity defaults could hit 15%, which is higher than during the financial crisis. So in this video, I want to share all of the news that has been happening in the financials and private equity sectors that has been causing this sell-off on Friday. Then we will also be listening to an interview from Bruce Flatt where he was asked directly about this sell-off and the worries that investors are having. He's a very grounded person, and I think that he shares a very useful perspective right now. So with all that being said, let's just hop right into the video. So the first major piece of news that I think is impacting the sector most is what is going on with a private equity firm called Blue Owl. And this article right here says Blue Owl turmoil adds to strain in $2 trillion US private credit sector. So what's been going on with Blue Owl is that late in 2025 and in early 2026, redemption requests from retail investors far beyond the company's historical norms. And this is because in November of 2025, Blue Owl tried to merge one of its private funds into one of its publicly traded funds. However, investors realized that the public fund was trading at a 20% discount to its actual value, which meant that the investors would take a massive haircut on their money if the merger between the two funds actually went through. This triggered a bank run mentality, as investors rushed to pull out their cash at full net asset value before the merger could force them into the discounted public shares. Now, the private equity fund that Blue Owl had was a semi-liquid fund, which usually allows investors to withdraw up to 5% of the fund's value per quarter. But when 15 to 20% of investors all ask for their money back